And there was actually an opportunity that I highlighted in Monday's breakdown where we had this fib move. So from A to B, price came down to the 50% and then basically had a 150 pip rally. Now, what I want to highlight here is the power of Fibonacci. So, if you had taken a position from here, you would have been targeting the previous high as your first target. Our second target is the first fib extension, the minus 27%, where you would have taken off some profit. And then your third TP is our second extension, which, as you can see, price rejected to a T. So this is the power of Fibonacci, guys. Even here you can see that price rejected the minus 27%, retraced 30 or 40 pips, and then obviously we had this impulsive move yesterday where we've tapped the minus 61.8%. So this is just a perfect example of fibs doing their job and why we utilize Fibonacci, why it's so vital for our profit taking targets, for identifying areas of retracement. If you had taken a fib from A into B, which was highlighted in Monday's PDF document as well, we saw a correction into the 38.2 and the 4-hour 50. So this was our first area of confluence to take a short position. We then saw price roll over, break out of this correction, and although now price action is looking a little bit choppy here, we could see that this was an impulse followed by another correction, and then we had one last drive lower into this liquidity zone and the minus 27%. So when price hits one of our Fibonacci extensions, we always expect some form of a reaction. And you can see here how well price is respecting the minus 27% and also this area of liquidity that we've already highlighted. Yeah, I mean, price action has been very, very clean on this pair. We had this impulse followed by this correction, retracement, nice little correction here, little impulse, another really clean correction here, and then this beautiful impulsive breakout. So yeah, price action has been looking very, very nice on this pair. So do we kind of just consolidate here, form this correction like so for a further breakout down to the minus 27%? So let's start by looking at this on the 4-hour. Following from this falling wedge formation, we had this impulsive break higher, followed by this correction into the 50% fib, like so, and then we saw this beautiful impulsive move higher. It did look like we were rejecting the minus 27%. We can see this kind of shooting star formation followed by this doji. So I was expecting a retracement to then take this higher. But obviously with the trade war news yesterday, this has basically just continued to push higher with no real entry for myself. But again, guys, you can see Fibonacci is doing its job. We've hit the minus 61.8%. And if we look left, we can see that this is previous structure highs as well. So that all makes sense. That all aligns beautifully. And just another perfect example of our Fibonacci ratios doing their job.